And someone got to Trump and said, if you don't fucking do this, we're done. You got to do this right now. You need to stand for delivery right now, or we're done. I think the reason that it's going up is that there's more demand than there is supply. But I would say that if you go back to Wednesday, the silver market traded 487 million ounces of paper silver. And then on Friday, 356 million ounces. This is all done to hold the price below 37. And it's the second largest short position by the commercial banks. These are the ones that are financing the companies like BlackRock, the ones that own all of the military contracting companies that are making the high-tech weapons. You have the second largest short position in the history of the COMEX market ever in silver right now.
Yeah, it's huge.
And it's still going up. What does that say to you about the strength? They are being challenged by the biggest money in the world, by the Indians, by the Russians, by the Saudis, by the Chinese. Their sovereign wealth funds are saying, nah, it's okay. We'll stand for delivery. We don't care if we have 12 margin calls. We're going to stand for delivery. We have more money than you do. We're going to stand for delivery. That is the difference. So you have let me just see if I can give you some even more crazy numbers. I think I can. I might not. What is the total number of ounces that are? The short position is like 900 million ounces, some ridiculous amount.
Yeah, it fluctuates. It's been really close to 1 billion.
Yeah, and so you have, and how much of that is naked, And so let's take a step back and look at what the ECB, the European Central Bank, just said publicly last month. The ECB warned of increasing counterparty risk in gold derivatives for the euro area. In the May edition of the Financial Stability Review, the ECB added that a significant share of these gold derivatives, and you can add silver into that too, were over the counter and not centrally cleared. That means they were traded in London and not traded and COMEX, which is centrally cleared. The over-the-counter would be the way that the LBMA is. It's an over-the-counter market, peer-to-peer in essence. There's no central clearing authority like there is at COMEX. The big point to take on board is an official recognition that stand for delivery obligations on COMEX are behind the crisis. They continue since November. Warehouse stock, nadir 26,470,000 ounces have stood for delivery in gold. Eurozone banks have swapped their gold for paper, and the gold is disappearing in deliveries. Behind the ECB's public concern is a far deeper one. It is as close as we can get to an official warning that the gold paper game is coming to a very nasty end, likely to drive gold measured in paper currencies far, far higher. Incidentally, the same problem exists in silver without central bank participation. So this is exactly what you have. You have a situation where forever these banks, these exchanges in the West and the banks that traded on them were able to hold down the paper price because no one stood for delivery. Nobody did, less than 1%. And now all of a sudden, whether it be in London, even in Shanghai, and in the United States off of COMEX, the deliveries are exceedingly massive. And these people are freaking the hell out. Then you get a delivery failure and a run on the exchanges. It's the same thing if your bank says we don't have any money for you, and that gets out on the 6 o'clock news. First thing tomorrow morning, everyone's going to be at the door. Give me my damn money. And it's the same thing here. I don't know. I think that it's very interesting. If this is really true, which I have no reason to believe it's not from the dailygold.com, we are 3 days away from a turning point, according to the last several bull markets in gold. You can see that on June 20th, things began to accelerate. Now, I don't know what the hell June 20th means, but each historical comp surge higher after June 20th. So little food for thought there for people who are thinking about gold and silver, that we're right there. We're right at the pivot point. And it's interesting when you talk about people who don't quite understand what the power that gold has. I've been buying it gold and silver every 2 weeks for 35 years. I get it. People don't. Let me explain to you what I mean. Everyone is so fixated on price, right? need to make a return on your investment. It needs to charge interest. Bullshit, it does. In January, well, today, right now,
Yep.
today, if you call the average price of a house is 416,900, and we have gold right now at, call it 30. Let's just call it 3,400. It's 3,390. We'll call it 3,400 for the sake of math. So if we take 416,900, and we divide it by 3,400, it's 122.6 coins to buy a house. In 2000, when gold was $252 an ounce, or even 274.50, it was 252 in 2002. But let's just go to the beginning of the century. 274.50 was the price in January, I believe January 1st, or in early January. So if we take those same 122 ounces times 274.50, you get 33,489. So 25 years ago, those 122 ounces were $33,500. Today, it's 417,000, and it's earned nothing but dust for 25 years. It's outperformed almost every asset class while removing all counterparty risk in your possession. And I would say to young people out there that the same opportunity exists in silver right now. A few 1,000 ounces of silver in 20 years may buy you a house. That's no more crazy than saying the same thing about gold 25 years ago. And I think that there's a lesson to be learned there. When we see the largest delivery in the history of the COMEX market ever happen in the May contract, but massive deliveries happening every month over month over month, and China, the second largest producer in the world, flying throughout Latin America, buying concentrate and doré from the miners directly, shipping it back to China and refining it because they want it so bad as the second largest producer in the world. What does it tell you about the value of silver? Why are they holding it down so much? Because it is not an industrial metal. Sure it is, but it is far more strategic than it is industrial, as it is disappearing in nature because it's used in industrial applications like bombs or solar panels, or the computer you're talking to me on has probably a fifth of an ounce of silver. Now, does it make sense to smash that computer apart and pull out a fifth of an ounce of silver? To
No.
recycle it, $6 worth of silver, it's not even worth the manpower to do it. So, the point of it is that silver, all the silver used in industry is gone. It's a depleting asset. And if it weren't for the Western central banks who have been holding it down, the price would be much higher. Now, what you're seeing are exchanges popping up. A new one is coming in Singapore. We've seen the Shanghai Metals and the Shanghai Futures Exchange cumulatively have greater volume than that of the COMEX. You're seeing the BRICS exchange that is coming, the Moscow exchange, the exchange in Dubai is getting far more volume. These countries are accumulating and possessing all of the world's commodities, and they are more interested in being able to set the price and taking that away from the West than anything. This is about breaking free from the Western suppression. This Western rules-based system has benefited us, and all of the world's commodities valued in dollars has given us a huge advantage. Now these countries are saying, screw it. And I always say, it's the comment that the guy that's developing the BRICS grain exchange said: we produce more and consume more grain than they do in the West, but we can't control the price. It's done on COMEX. With the development of the BRICS grain exchange, that will change. Do you think they don't know that about all of the world's commodities? They're just not saying it. And that's why you're seeing these deliveries. They're challenging the West. It's accelerating. No, we'll stand for delivery. Thank you. Give me it. Month over month over month over month. And someone got to Trump and said, if you don't fucking do this, we're done. You got to do this right now. You need to stand for delivery right now, or we're done. And thankfully, someone got to the Trump administration. So these deliveries, in my mind, are the Treasury or the Federal Reserve, probably the Treasury, that is standing for delivery in huge amounts, because it is an existential threat to the sovereignty and to the future of this country. And when you see President Trump on Easter Sunday say, he who has the gold makes the rules, thank you very much. Well, what the hell does that mean? Where does that come from? You never heard Biden utter anything coherent or anything even remotely close to something like that. And when you see the Treasury Secretary Bessent say there will be a new Bretton Woods monetary system within this administration, well, what the hell does that mean? All of these clues that are being dropped, the crumbs, you can put them together and choose not to see where it's leading, or you can trust the clues and go with it, because that's the all at once moment. We're seeing the little by little by little by little, and either you trust it or you don't. That's your prerogative. I believe that we are transitioning into a new monetary system, one that where gold will have a central role. It will be tied to a new system, either the way Judy Shelton says, through the treasury market, or something more ambitious like the way the BRICS are doing it, over Enbridge, settling in gold. And you can see that too, because the Shanghai Metals Exchange is opening up and building new exchanges to internationalize their reach. They're doing them in Africa, they're doing them in Asia, they're starting in Saudi Arabia and in Hong Kong. And the idea is to trade local currencies, CBDCs, over the bridge network, which is 98% less costly than the SWIFT network, and clears in 7 seconds instead of 3 days. They can do that, and then settle imbalances, either currency imbalances or trade imbalances, with gold. But by putting the metals exchanges in all of these other jurisdictions, it's better than just having it held in one jurisdiction, and that inspires more confidence. So you can see it everywhere. They're going to have a settlement system tied to gold, maybe ultimately a common currency, but that's in the future. A settlement system tied to gold, and maybe we're going to have a treasury system tied to gold. But whatever it is, I believe that's where we are heading, into a new system that is not about promises from a broke country, take our treasuries and promise they're good, versus holding gold in your own possession, which has doubled its performance, that being of the treasury market, the 10-year, since 2000, with no counterparty risk. Just look at last year, was up 40%, gold was, and the treasury was up 4%. Look at this year, a 10-year treasury 6 months through the year have netted you 2%, and at the same time the dollar's down 10, gold's up 35. So you can see that this is something that is accelerating in terms of its performance, in terms of its demand. And net since 2014, Jared, there has been no new central bank buying of our treasuries. It's waning. So there are a lot of things happening all at once, and either you get it or you don't. So you don't buy gold to get wealthy. You buy gold to get the hell out of the way of what's coming.